Alain Bokobza joins us now, Societe Generale, on the U.S. polls, their impact and what's anticipated. Alain, to start off with, do you think markets have actually now started to price in that Biden victory? It sure looks like it, given the recent polls. And what's your outlook when it comes to the current uncertainty or ongoing volatility in light of the election outcome? As I said, it's starting to look like a Biden victory now. What's the likely impact on markets over the next few days?
The highest volatility regime would be in case there is a delayed result or a contested election. If, for example, Biden were to win with a narrow majority and Trump were to contest the election, that would be potentially a flash crash of 5 to 10% on equities. So the contested election can trigger short-term volatility, especially in the equity market. On the background of the first part of your question, that the market has been pricing in lately a sweep victory, a blue sweep, a blue wave, that not only the presidency would go Democrat, but also at least one, if not the two chambers, the House of Rep and the Senate. This is far from being given, as in a few of the swing states, the advance of Biden against Trump remains rather narrow. So at this stage, the market are rather shy. We have reduced market liquidity, reduced volatility, I must admit, but the market is shy of taking huge positions for now.
Okay, so you mentioned that the two potential outcomes for the rates market is a credibly contested election that roils the markets, and a Democratic sweep that actually opens the door to more fiscal spending, which would also be something that markets would like. That's actually also a nearer possibility. How do you see this impacting rates? So
there is the election results. So there are three elections in one. There is the presidency, there is 1/3 of the Senate, and there is 100% of the House of Representative members of Parliament. So in here, the outcomes are very many. At this stage, the most probable scenario, according to the polls, is that the presidency should switch or could switch Democrats. The House of Representatives could stay Democrat, and Senate we don't know yet. It's the most important feature beyond the result of the election itself. The United States of America are currently living, and there is a need for fiscal impetus like you have in every bigger country in which there is a second wave like many.
Alain, in terms of commodities, what exactly is the outlook? Because you mentioned that Biden would be more negative for oil and gold than if it's a Trump re-election.
The fact that we would expect the fiscal spending overall, the fiscal policy, to be a bit tighter under Biden than it would be under Trump, because embedded in the Biden fiscal plan, you have some increase in corporate taxation, you have some increase in personal taxation for the ones who earn more than $400,000 a year. So that would be more bearish for the USD in the case of Biden than it would be for Trump. And the USD would be more in the fall, and that would be extremely good for gold in the case of a Biden election. And in Trump's case, there is definitely a case when he will support the oil industry, and that should be reasonably good for that industry, particularly in the US. So yes, we are having some investment ideas according to who wins within the commodity space. But overall, I would say that our view is that the US dollar will go back on a weaker trend after the election, probably faster fall if Biden is elected compared to Trump, and that overall should be good for the commodity space.
With the world becoming more integrated because of how things and technology has connected all of us, what do you think would be the implications of this for emerging markets? Last night, BlackRock has shared that a democratic win would imply weakness in the dollar, and weakness in the dollar obviously strength for emerging markets.
The world, as we have seen, I think the most important feature around the U.S. election is more related to China, as the anti-China rhetoric, whoever wins the election will stay in place. And I haven't heard that much of rhetoric, which would be something for or against India, for example. Overall, there is important. So India is more protected than some other countries like Iran, which is definitely involved in the U.S. election on the international diplomacy of the U.S., like China with the trade war. I think India is somewhat more protected. It's more on the domestic issues like the growth outlook, the virus outlook, the monetary policy outlook, that we have issues when we try and make forecasts on Indian assets, be that the currency, the equity, or the rates market. So they are less involved, I believe, India as such in the U.S. election than many others.
Alain, good to have you on the show. We let you go on that note. It's here, the big day, and just a day ahead of the U.S. elections. You've got the Dow futures rise up by about 200 points. It's a strong handover from the global markets overnight. And this morning as well, you've got Asia, which is holding out quite smartly in the green, in fact, about over 1% gains coming in across the board. In fact, markets like Korea up 2%. Hong Kong as well holding higher by roughly 500 points. Shanghai, a strong move, 1.25% higher, and Japan as well looking good by about 1.3% as we speak.